Hi, I'm JoyMacknight, Technology Editor at The Banker, and I'm here at Innovate Finance Global Summit. I'm here with Monica Kalia, founder of Neyber, an online lender. Monica, can you tell us a little bit about Neyber and your business model and how it sort of came about, what kind of pain points you were trying to solve for when you launched your company?
So Neyber is a fintech business that started in 2014, so we've been running for about 2 years now. We operate in the consumer lending space. So essentially what Neyber does is it provides individuals with access to affordable lending. Neyber has a platform which allows individuals to go online and borrow between £500 and up to £25,000. But the key differentiator in terms of the Neyber model is how we actually get to market. So we actually offer a partnership approach, and what that means is that Neyber actually partners with employers, and the reason we partner with employers is that we recognise that individuals are finding it difficult to get access to affordable lending, and therefore by virtue of the partnership with the employer we can effectively allow employees to borrow more affordably and more easily, primarily because we take all the repayments of principal and interest via salary deduction.
Okay, and is it aimed at a specific section of like SMEs or larger corporates in terms of your business partners?
So predominantly we've been focused on the large corporate market. We've actually launched in the public sector, so already we're working with the police force nationwide. So to date we've lent close to £15 million to the police officers nationwide, and we're effectively extending now to other large corporates across both public and private sector. But you know, access to credit is a mainstream problem, and therefore we see this as a solution that could actually apply to both large corporates and SMEs.
Okay, and in January you managed to secure a funding round of like $6 million, I think it was, and from private investors. How difficult was that, or you know, how did you actually have such a successful funding round?
Well, capital raising is a full-time job for any founder, and I used to spend my life when I was at Goldman seeing investors continuously, and so in many ways this is kind of an extension of that role. Capital raising is difficult. Investors need to be persuaded that you have a viable model and that you're really solving a problem, and I think with Neyber, because we are solving a social problem which is access to affordable credit, people feel that the proposition resonates. I think the other issue with fintech disruptors is scalability, and so you have to be able to demonstrate that your business model is truly scalable. So we expect to reach about £100 million of lending by the end of this year by virtue of our partnership with the police force but also other employers, and so if we can demonstrate that scalability, that's really giving the investors the confidence that this is a business they want to be invested in the long term.
Okay, and you talked a little bit about being a fintech disruptor.
Yeah.
Why do you describe yourself like that, or how do you think you disrupt the financial services industry?
I mean, I think, you know, obviously today's conference at Innovate Finance shows that, you know, there is a lot of focus on fintech and how that can be disruptive. Now, I think disruption kind of takes many forms, and in the conventional sense, fintech disruption really means using technology to provide something in a more efficient way. And so Neyber certainly does that, and we've invested a huge amount of time and money in developing an application which is really state-of-the-art. So we recognise that financial services is typically quite a clunky journey for users. It's not particularly intuitive. The language that people are exposed to is, you know, often quite opaque. And so from that point of view, we have what we think is a state-of-the-art platform. So the other aspect to disruption is offering a genuine consumer benefit. So just using technology, in my view, is not sufficient. And what we want to do is to be able to pass back the benefits to consumers. So what we do is, by working with the employer, we actually have a lower cost of default. We have lower costs because we effectively market directly to the employer as opposed to consumers. So our customer acquisition costs are lower. We also don't have any branches or legacy technology that banks often have. And so from that point of view is that our lower cost base can then actually be translated back to the consumer in terms of a more affordable proposition. And I think that's the key aspect of disruption, marrying technology with also a genuine consumer benefit.
Excellent. And what are your plans, let's say, for the next year?
So we have big ambitions. We expect to be the market leader in terms of the salary lending model. We're also expecting to be top 3 with respect to the consumer peer-to-peer lending space. So it's a market which at the moment has seen 2 dominant players, Zopper and RateSetter. So we effectively want to be a leading player in that segment. And going back to what I was saying earlier, our ability to scale is going to be really key in terms of making sure that we are seen as a serious player within that space.
Excellent. Thank you so much, Monica.